Lots of discussion these days, debating and prophesizing on the shape of the recovery to come. Is it going to be a quick V, or a prolonged U, or even the tragic J, the no recovery option? The stock market performance has been widely used as the expedient, visually effective indicator of what is happening to this virus-battered economy, even more so than jobless claims and business shutdowns. However, a very significant discrepancy has developed between the performance of the larger economy and the stock market itself, and nobody seems to focus on it. Let's look at the markets and see what's happening. We'll be listing some cold facts, and please stay with us until the end so we can draw some unexpected conclusions that affect us all significantly. The following charts show the performance in time and the relative percent performance of various types of assets, so how well they compare with respect to one another. The first chart, figure 1, is the yearly performance chart. The largest US stocks, represented here by the S&P 500 index, the red line in this chart, did incur a sharp 35% fall that started at the end of February 2020 and bottomed almost exactly 1 month later. As the fall developed, mass media took this as the confirmation of a now unstoppable financial Armageddon, adding to the enormous unemployment numbers, a shut-down business environment, and world population in a lockdown. But 2 months later, the S&P 500 is at a few percent points up for the year, positive, that is, having more than recovered the so-called tragic fall that drew the pundits to despair in just a few weeks. Quite notable in this chart is the much more dramatic fall experienced by the oil industry, with an over 80% fall starting in January 2020. The US dollar was flat for the year. US bonds and gold delivered more than 30%, even better than the high-tech Nasdaq stocks that delivered a bit less than 30%. So, if we disregard all the rest of the economy, stocks, bonds, and certain commodities this year experienced a blip that was promptly recovered. Certainly not enough to represent the complete shutdown of the world economy. The year-to-date performance shows US bonds and gold being the two big winners in these uncertain times, clocking 20% and 14% profit, respectively. The 1-month performance in Figure 3 shows the crude oil fantastic recovery snapping back more than 30% in less than a month. This is still critical territory for the producer, for sure, but a splendid opportunity for the vigilant investor. It is also quite interesting to look at the long-term view. In this picture, we have the 15 years performance of these markets. The last few months don't even show up as big moves and blend in the day-to-day market fluctuations. As a side comment, gold bugs will surely puff their chest, noticing how much stronger gold performed relative to the S&P 500 and just everything else, although US bonds did pretty well too. So this period has been an adrenaline-pumping sequence of opportunities for swing traders. But the obvious disconnect between the broader economy and the stock market should give us all a pause, as it seems to challenge some long-term rules of finance. We certainly cannot exclude the possibility of further market drops in the months to come, but the fact that this initial swing down is already done with doesn't quite seem right. While Main Street is going through unprecedented crisis, the stocks are back close to last year's highs. Stimulus money is obviously showing its hand. Every investor, even the small individual investor, not just the big guys, should be aware of this new environment and benefit from it. Buy and hold is out of the question, but prudent trend following can deliver very strong returns to those who ignore the useless blubber of the media and focus on the opportunities. In this current limping economy, we all need income, don't we? This is it for this week. We hope these comments may help you in your investing. Please share this page with your friends and family and give it a thumb up. We need your support to help more and more fellow investors design the right trades and enjoy big profits too. Thank you very much for your support.